Yes, good evening, guys, and welcome to this week's edition of our weekly analysis and weekly outlook. So, last week I did mention that we're gonna see dollar rallying all the way to 98.1 level. It missed, I'm sure it did rally all the way to 97, 98, 97, 99. It didn't reach the 98, missed 98 by a few pips. But be that as it may, we did manage to see a correction to the upside last week, which I was expecting price to do, but after a dip to the downside, which really didn't happen. And once price tested the 98 zone, we clearly saw a rejection from that 98 zone. Price rejected the higher moves. You can see here from this week. See this week. There's clear evidence of higher price rejection. Now, what caused all this? Probably mainly fundamentals. We've got a lot of fundamentals that are affecting the markets right now, and in the coming week we need to be very vigilant. We need to be aware of the fundamentals that are coming through. Remember, it's NFP week also, so the dollar is definitely going to be trending, and there's a couple of strong news on the dollar that are also coming through. And the Senate vote for the impeachment on Trump, he might get acquitted probably by Wednesday, but we'll never know. But those are the fundamentals that are definitely worth a look at in terms of our dollar analysis. So now, looking into this coming week on the US dollar, I'm expecting further weakness coming into the dollar. The weakness which we saw prior to close off last week. Currently I'm on a monthly chart. You can already see we're just starting February, and the first week of February hasn't opened. So we saw a rejection of higher prices from the 98 zone in the January month, right? So now coming into February, I'm expecting further weakness coming into the dollar. You can see that rejection there. The reason of this rejection is because of these two guys here, these two candles, the bearish engulfing candles. Bears have got more strength on the dollar right now, so I'm expecting further weakness into the dollar. So February, I'm expecting dollar to trade to the downside. But now the question which comes now is, where should we be looking for those bearish evidence on the dollar index? So now you can see on a monthly chart we had a clear rejection. That means the bears that were in play in December, the weakness for December has stood its ground, right? So the bears are strong. So February, I'm expecting more weakness, but it doesn't mean the month has to open and then it just falls to the ground. Yes, it can happen, but we need to highlight levels that we are going to be watching out for. You see, we need to highlight those levels that we are going to be watching out for further weakness. Those in the mentorship, you know that I've always been mentioning that as long as dollar is below 97.40 or 97.50, expect further weakness coming in, and expect assets like gold and the euro to appreciate in value. You see? So the same principle is applying now. We are trading under 97.50 on the dollar index. That on its own now detects or determines our outlook for the coming week, meaning we are going to be bearish on dollar index. Our main lookout for on DXY is bearishness, expecting weakness into the dollar. And when it comes to gold and fiber, we're expecting more further moves to the upside. We're expecting bullish movements, and we're expecting bearish movements on the yen. So now we are on a monthly chart. I'm going to go down to a weekly chart for dollar index. Right, as you can see, I've got all my levels marked. These levels, they were marked in last week's mentorship video, so I don't want to disturb these levels. I'm just gonna open a new chart for dollar index. I'm going to open a new chart. Right, now I'm gonna go down to a weekly time frame. The reason why I'm doing this is because those levels that I marked on this chart, I need these guys to stay there. Remember, this is my first quarter of 2020 analysis, so these levels are going to be in play. So now we are on a weekly chart for DXY, dollar index. Now what we need to do now, we're expecting further weakness. Now you can clearly see we had our last up candle here, this last up candle here. That's our bearish order block. So we're expecting weaknesses coming in from that block, right? That was our last up candle, which was breached during last week's price action. It was breached here with this wick here, right? But let's disregard the wick right now, because that's retail money. That's not institutional price movement. Those are institutions taking out profits or liquidity voids being filled up. So now that we have highlighted our bearish order block, the last up candle, right? That means I'm expecting DXY to push back up before it goes to the downside. But now to the downside, where exactly is it gonna rally to? These lows are already under attack. See, those lows that I've highlighted, they are already under attack. So this is the price action that I'm expecting on dollar index in the coming week or in the coming weeks. This can happen in this coming week, or it can happen in the following week. So now I'm going to highlight the levels that we have to look out for. So now the opening of this candle comes in at just hold on, I hope I can get this. Okay, let me get rid of that so that I can get right. Our opening price came in at 97.38. You see 97.38, that's below 97.50, and our high was 97.73, our low was 97.14. So now the price that we need to take note of here is the 97.38. So I'm gonna grab my tool here, horizontal, right on the mark, 97.38. That's our price of interest. So 97.38, I'm expecting price to push. If price pushes into 97.38, that is our bearish order block, then I'm expecting further movement to the downside. But now if you look at the price action, what price action is telling us? Last week's closing price. Can you see how strong bearish that was? You can clearly see how strong the bears were during last week. And prior to closing, DXY was strong bearish. So now that we have highlighted our area of interest on the weekly time frame, now let me just put back my rectangle tool here. Now we're going to go to a daily time frame. Right, this is our daily time frame. So now we have seen a breach of quite a few candles. Now you might ask yourself, why did this candle close right at 97,160? You can see what it did. It took out these two candles here, you see, of which I was expecting a bit of resistance support here to push further up during this price action, of which it can happen. Price can open, then test the supply zone, test our order block, and then before it crashes to the downside. So now it won't surprise me that DXY can open with a gap to the upside, right? But we have to wait and see. We can't speculate on that. If it opens with a gap to the upside, then expect it to test this zone here, right? Before it continues with the bearish movement to the downside. So now this is our daily outlook on dollar index. You can see the levels that we are looking at to go short. See, this level here was taken out by one candle. This is Friday's price action, guys. So you can see how strong the bears were. So expect further weakness coming into the dollar index. So now that we have highlighted that, we're gonna go to we are on a daily chart. Let's go straight to an H4 so that we can highlight exactly the levels that we are looking out for. Now you can see these lows here. You can see those lows here. They're too clean. You see? They're too clean, and already they've been taken out, right? Except for this other one. Okay, let me just grab this one here. And remember, we don't really take into account the week. Of course, when it comes to liquidity, you have to put it into consideration, but you can clearly see the liquidity which was down here has already been tested, right? Sell stops, right? We've got sell stops here and here, right? Now, after those sell stops taken out, which level do you think price will rally to, right? After those levels have been taken out, what's the next price action or price level that you expect dollar to go through? Yes, it can continue coming to the downside to test this range, but now price isn't that predictable. Expect a bit of retracement, right? Expect a bit of retracement. It can be a retracement all the way to here, all the way to this low. We can have a retracement all the way to this low here before it starts moving to the downside. That's a clear possibility. Nothing can stop price to do that, you see, because you can already see this liquidity void here. market can try to close this void before it continues to the downside. So now, for us institutional traders, right, with the way that we are trading in our group, 97.38, that price zone, expect some resistance here, in this area here. Expect some resistance when it comes to dollar index, meaning you'll be looking for bearish evidence on the 97.38 price zone, right? So price might not reach 97.38, but the moment you see price testing that zone, yes, of course it can go further into 97.39, 97.40, but I don't see it breaching here before we see another major move to the downside, like what we did here on Friday. You see, expect that kind of movement in the coming week or the following week. So 97.38 is going to offer us a better chance to take the market to the downside on dollar index. That means we are bearish on dollar index, right? Which in turn makes us bullish on fiber, bullish on gold. So now we're going to look at what fiber is telling us. Okay, let me go to the month. Already you have noticed that I've highlighted these levels from last week. Now on fiber, you can also see a rejection of lower prices. From which level? $10. And you know what I always say about $10. See, the Americans, they will never be comfortable with the $10 level on euro. You see, $10 is a critical price zone when it comes to fiber, and you can already see that $10 rejected massively, right? So now let me just open another chart on fiber so that I don't disturb my quarterly analysis. You can see we had a rejection on fiber, right? By the close of January, price rejected from $10. Lower prices were rejected, meaning we are bullish, right? Meaning price is bullish on Euro USD. So now, since we have noticed that price is bullish, what's there to support that notion? What's there to support that conclusion? This guy and this guy. You see, we've got bullish engulf here, bullish engulf here. That means prices are moving to the upside, right? The reason why January didn't close below the low of December says a lot, you see, in terms of price direction. Remember, we had a change in market structure here, and we are still in that higher time frame zone where the market is changing its structure to the upside, right? So now that we have determined that, I'm going to go to a weekly time frame. Now you can clearly see our bullish order block. The last down candle, see this last down candle here. That last down candle is going to offer us opportunities to take the market to the upside, right? You can clearly see here this level has managed to hold. That's our $10 zone, right? So prices have respected the $10 zone. Just the same way we have discussed the dollar index is the same way we are going to look at fiber, but opposite direction. We are bullish now. So now that we have highlighted that zone, I'm going to go to a daily time frame so that I can refine the zone of which we should be looking for. Okay, let me get rid of this one here. Now you can see on a daily time frame, this also has our last down candle, the one that was breached here. You can clearly see it was breached here. So now I'm going to mark out the level of the candle that it breached. Closing price $10.30. You see $10.30. Right, let me extend this guy here. And then we saw Friday strong push to the upside, meaning bulls were in control. But now with market pushing up so strong on a Friday, what do you think happens to this whole gap? That's our liquidity void. Yes, market can continue pushing all the way up, right? But expect a bit of retracement. As a trader, you have to anticipate that, okay, no, price might correct to the downside, but eventually those bulls are gonna come back into the market and keep pushing price higher. You see, you have to anticipate that. Don't just sit there and then, oh no, Ivan mentioned this level, then you only react when that level is reached. No, that's not the way to do it. Expect price to retrace. So now when we are looking at dollar index, at which price zone do we expect a retracement to happen? If it happens, to which price zone is it gonna head to? Because it might not reach the $10.30, right? But now which price zone can it get to? Just by mere looking at this price action on a daily chart, where do you think price can head to, right? Where do you think price can reach out during, say, a correction to the downside, since we're in a strong bullish, right? Here, these lows here, you see, $69, and we've got the $53, right? Expect a correction or a retracement to these price zones before another strong push to the upside. Yes, you can wait for market open, and then when it opens at the same level, then you say anticipate it to keep further going high. Yes, that can happen. But now you don't want to take the drawdown of market coming to the downside. You see, you need to minimize your risk, right? So now that I've highlighted the $10.53 and $10.69, which we're gonna say just gonna round it up to an institutional price level of $10.70, sorry, $10.7, right? Now $53, I'm just gonna round it to $53, right? So it's in those areas that I've highlighted, $10.70, $10.53, right? Expect price to retrace. You see, that's why Monday's trading range is crucial. We have to wait for Monday's trading range. Expect Monday's trading range. You see, if it happens in such a way that Monday's trading range opens and then just rallies, right? Then we wait, you see, because in those rallies we are going to get opportunities. We are going to see bases being formed during that rally. But now, looking at $10.70 and $53, those are the potential price areas that we have to look out for long entries. Yes, euro has been under pressure of late, right? It has been under pressure, and it was one of the assets in our analysis from last week that only reacted later into the week. We had a good week on JPY, on gold, on Euro GBP. Most mentorship guys, they can attest to that. So now I'm gonna go down to an H4 chart, right? Now I'm on an H4 chart. Now you can clearly see why I say $53 and why I say $70, right? You can clearly see now the price action that I'll be anticipating. So I'll be anticipating a drop into $73, which should offer me better odds or better trades to take the market to the upside. You see, remember what this does is, if we wait, if we see that okay, market is correcting to $10.70 or $10.53, what this does to our risk management is it reduces our risk exposure. Rather than opening, say, a long positions on Monday with the market open, we open our long position. This whole correction increases our risk exposure. But now if we wait for $10.70 or $10.53, we are reducing that exposure, because probably our stop loss is going to be down here. But now if we open a position here and we have a stop loss down there, this whole exposure is too big, right? Rather than waiting for these two levels. So I'm expecting price to push all the way to the upside, but from $10.70 and $10.53. So we are bullish on euro. You see, we are bullish on euro. So now it's up to you guys in the mentorship group, if you decide to dip down further into an H1 chart, so that you can clearly see the price action that is happening. You see, so that you can see, okay, this is what we are talking about. So I expect a dip. You see, this level also, it can offer good chances to the upside. $10.80, you see, institutional price level, it can offer great opportunities to the upside, but that's on a lower time frame. You see, so that's pretty much about it when it comes to fiber. And finally, let's look at gold. We're not going to talk about the yen in this week, because the price action on yen is not looking that kind of straightforward. But consider last week's mentorship video on the yen. But I'll be looking out on the yen to see what price action we're gonna get on the yen. Now coming back to the dollar, to gold, I mean, 1585 was our price of interest last week. We were looking for short trades from 1585, and it paid very well from last week, right? 1585 paid nicely on gold. So now, as you can see how the market closed strong bearish on gold, right? But now we still have this order block here in play, right? This zone here is still holding price. You see that zone there, this candle here, that order block is still holding price on gold. So now how then are we going to be trading gold? So now since I've highlighted the order block, we have seen it. Now we are on a monthly chart. We can clearly see that, okay, January closed strong bullish, December was bullish. We broke out of this channel here. You see, we broke out of the channel and we have closed strong bullish to the upside. So now we've closed above 1585, which was our price area of interest, where we're looking for short trades, but now we've closed above it. That means we are now paused on short trades. We are looking for long trades. Now I'm going to highlight January high came in at 1611, then January close 1589. Then we've got these highs here that come in at 1556. Now I'm gonna go to a weekly time frame. Look where 1556 came in, there, on that bullish order block, right? Bullish order block for price to push to the upside. That could be a new level of demand that was created in the market. So now this is a weekly time frame. Now I'm gonna go to a daily time frame on DXY. So now you can clearly see that, okay, we've got the 1589 zone, which was our closing price of last week. We clearly breached the 1585. So now I'm expecting gold to, remember, the moment dollar index makes a correction to the upside, expect gold to also make a correction to the downside, right? Before another push to the upside. You see, it's easy to understand this, guys, and the moment you get a grip of it, the opportunities that come, you won't have to be looking out on most pairs, jumping in from one pair to another, jumping in from one pair to another. That only confuses you, and your decision making becomes weak. It becomes too intertwined in different places, you see. So you just need to focus on a certain number of assets. You see, like now we're only focusing on gold, yen, dollar, and euro, USD. Yes, of course, there's more opportunities that come from other pairs. Like last week we had euro GBP, because we clearly had I had clearly seen a good setup that we managed to benefit from. So now coming back to gold, expect price to retrace back to the downside, right? But now this is a daily zone. We've got this level here. Let me highlight it for you guys. See this zone, 1565. Now I'm gonna go to a H4. 1565 is going to be also an area of interest. Expect price, when it corrects, when it retraces to the downside, say down here, expect this zone to offer good opportunities to go to the upside, right? Even here, expect it to offer good opportunities, ideal opportunities to go long, you see, because currently gold is heading back for 1600 per ounce. That's where gold is heading currently. It's a strong bullish move to the 1600 per ounce zone. So yes, you can open a long position here to take it to 1600, you see, but now we have to wait for Monday's trading range to see how it reacts to the weekend's fundamentals, right? We need to see how gold is gonna react, and I'm pretty much sure that there's gonna be a wide movement prior to market open, you see. So we need to wait for Monday's trading range before we can decide what to do in the week, you see. We must be patient with the market, guys. Don't just jump in and say, okay, no, market is open, where's the opportunities, what am I looking out for? No, don't trade like that. It's not gonna work. You see, you get burned nicely, and you won't have any excuse. You only have you yourself to blame. You see, you only have yourself to blame if you trade like that, because I've seen quite a lot of people, they like to trade Monday's range, which it's not really a good idea. So now expect 1560, 1565, 1567 price zone. 1567 is coming in here at this high here. See this high where my mouse is? There we go. So that's 1568. Expect the market to correct back to retrace to those levels, and those levels will offer us ideal opportunities for long entries into the market. So that is pretty much about it, guys. This one is not going to be one of those long 1-hour videos. It's just a recap in addition to our main analysis, which I've done last week, which I urge people to watch, you see, because that analysis will be in play for the first quarter of 2020. So we are bullish on fiber and gold, and we are bearish on dollar index, you see, expecting further weakness coming in on gold. So these zones that I've marked, I'm going to leave them there. It helps me when I look at the chart. I look at the level, I see where the asset is trading at. And USD/JPY, I'll be posting a video once I've seen the opening price in Monday's trading range. So remember, guys, USD/JPY, that's the asset that opens first during Australian daybreak, sorry. So we need to take note of the opening price of USD/JPY. It's gonna determine gold's opening price. So yeah, that's much about it. I don't think there's anything that I have missed, and I wish you all a happy trading week, and let's get them peeps, guys, and keep on learning. We will get there eventually. We will get there the proper way, and let's keep trading. And yes, to those who haven't subscribed to the channel, just click the button below there, and make sure you've got the notifications turned on, so that each and every time I post a video, you get notifications right on time. So yeah, thank you for watching, and have a great week. Thank you.